In so let's go ahead and get started. Welcome everybody. For those that are listening to this right now and you couldn't make it, I really hope that this does find you well. Today we're going to cover three different concepts. The first one being daily bias, the second one being time frame alignment, and the third one being order flow leg analysis. As I always say, it's you versus you. I really hope that you win. Do not compare yourself to anybody else but yourself. And right now, everything that has happened to you in your life is because of you, not because of anybody else. So I think that taking up 100% accountability of what we do will definitely get us closer to getting to success and also growing and also evolving over time as well. So let's go ahead and get started. Daily bias is something that we've talked about for quite some time. What is daily bias? Daily bias is, for example, today, Monday, the market just ended today, Monday, right? What are you expecting price to do tomorrow, right? What's the insight? Where where is price going to go to tomorrow? What's going to be the draw on liquidity? And this is really important. Why? Because if you understand what the draw on liquidity is, then you essentially know where price is going to, right? But for you to understand that, you need to do what I try to call a top-down analysis. Drop a two if you know what a top-down analysis is, or if you have heard of that concept before. Top-down analysis. Okay, I see Shah, Vinta, what's up, family? Lala, T, Cave, Tammy. Yes, top-down analysis. So basically going from a higher time frame to a smaller time frame, just to understand, do we have any continuity when it comes to the order flow? I want you to understand what is order flow. Order flow basically mean if we are bullish or if we are bearish. So at the end of the day, we want to see some sort of consistency across these different time frames to let us know what's the overall order flow at the end of the day. When it comes to bias, I really want you to learn about the following thing. Bias equals arguments. So how many arguments do you have that are basically showing evidence that the order flow or the bias is bullish or bearish? So let's go ahead and go through a couple of different examples of how this actually looks like. And by the way, shout out to T Trades for the great PDFs that he does create. I highly recommend you guys to go ahead and actually follow him. He has great videos on YouTube. And he explains things very thoroughly. So let's go ahead and take this example right here, right? If we take this example, I want you guys to drop a one, right? Bullish candle. The second day we see a bullish candle. Do you think that price is going to go to previous day high or to previous day low? Drop in the chat high or low on whatever you think. Okay, M says high. Y'all says high. High. And why is that? Why is that? Why? Because we have another bullish candle that is going into the direction of the previous day high. Again, the previous day high and the previous day low, these are critical liquidity pools. Critical liquidity pools. These are areas that price is going to either run through it and continue going up higher, or price is going to reverse and go the opposite direction. That's why it is always super important to wait for price and that body to actually close, that body candle to actually close, and that's going to give you a better understanding. I always say the following: the wick is going to do the damage, the body is going to tell you the story, right? So for example, if we go to the second example here at the bottom, what happened here? What happened right here? Can anyone tell me what happened here? Why is this so critical for us? Previous day high, right? Previous day high, previous day low. Did we close above this candle? No, we just swept liquidity. Again, the wick is letting us know, yes, price went above the previous day high, but it did not close above the previous day high. Meaning what? It may mean that we may see a reversal and that price may target previous day low. So you really have to take into account, is price displacing? Are we able to break above and hold? Or is it just a reversal? That's why it's really, really critical for you guys to understand candle science, because candle science is going to give you the opportunity for you to understand what price is going to do. So let's go ahead and do a quick example, just real quick, of what this actually looks like on TradingView. So we're going to go to the daily time frame here on NASDAQ, right? So let's go ahead and quickly go there. And let's go back into May 6th, right? Let's go to May 6th and let's go right here, right? So right now, what's the order flow? Can anyone tell me? Are we bullish or are we bearish? Or are we shifting into a bearish order flow?
Bullish.
Okay, why is that? Why is that?
You got a change in state of the, actually you got a market structure shit.
Both. We have both. And this is why it's really critical. Please go back to everybody, please. I beg you, go back to part 3. We talked about this, and that is a correct answer. Right here, once price breaks above this wick right here, this lower high, that is a market structure shift, right? When price breaks above the last red candle, that is a change in state of delivery. So now we have overlapping confluence. We have a market structure shift, and we also have what? We also have a change in state of delivery. These are two critical order flow shift concepts that everyone should understand by now. And if you do not, please go back to the chart, all right? And do your back testing so that you're able to understand it. So we have market structure shift, and we also have change in state of delivery. So right now, if it's right now, let's say, for example, it is May 3rd. Where do you think price is going to go? Well, price is going to come and probably the next day take out the previous day high. So what does price do? Boom, it takes out the previous day high. So it ran through the previous day high. So right now, what is the daily bias? The daily bias, is it bullish or are we bearish? Come off mute, do whatever you want. Bullish. Okay, Vincent said bullish. We're definitely bullish. We should not be looking for shorts, right? And then on top of that, what did we leave behind? We have a market structure shift, and we leave behind what? A beautiful fair value gap. That fair value gap is letting us know what price wants to continue going up higher. So you see how we're taking into account all these different arguments. What did we mention earlier? Bias equals what? Bias equals arguments. You want to identify whether or not we have bearish arguments. Sorry, let me go put bullish arguments or bearish arguments. And what are going to be these arguments? These arguments are going to be your fair value gaps, your order blocks, your swing points, your inverse fair value gaps. What else is going to be your breaker blocks? Is going to be your mitigation blocks. Those are going to be your arguments, and it's on you to identify them. And you're probably asking, Chris, how about if we have both bearish and bullish arguments, which that's going to happen more than oftentimes. How do I know what's going to be the daily bias? Well, if you have more bullish arguments, then you are bullish, right? So whichever has more arguments, PD arrays, and in other words, for those that want to follow ICT, these are basically PD arrays. I try to take out the ICT jargon just because I feel like it can confuse people more than oftentimes, right? So looking at here, right, looking at May 6th. May 6th, all we can expect is what? A continuation of higher. And these wicks are what? These wicks are your liquidity targets. So this level right here of 18573 and this level right here, these are levels that I know for a fact price is going to go ahead and go after those different liquidity points. And what do we see right here? Price is breaking above. We break above previous day high. Boom. Now we hit that target. Previous day high taken, bullish argument with a fair value gap. And what do we see next? We overtake that one as well. That's all that daily bias is. Everybody tries to complicate daily bias, but daily bias is just the following. Let's go here. If we close above the previous day high, the next day bias is what? The previous day high. If we fail to close above this previous day high right here, right? You see how this next candle, it goes, but it never closes above the previous day high. It never closed above that previous day high. So what does that let us know? It lets us know that we are 1000% coming down. So if we do this where we fail to displace the previous day high, the next day bias is what? Price is going to more than likely target what? The previous day low. That's simple. That's simple. Close above previous day high, the bias is going to be bullish, and we're just anticipating. We are not concrete on that. I don't want you to go into the market thinking that you know it all, because I can guarantee you, none of us know it all. None of us know it all. We do not know what's going to happen. All we can do is have targets, and we can make a prediction and have a thesis that's, supported by arguments that lets us know where price is going, right? So drop a one if you guys are good to go when it comes to this first example. Close above previous day high, the next day bias is previous day high. If we fail to close above the previous day high, the next day bias is it is the previous day low. I see a question here from Zoe. Will the illustrations be in Miro? These illustrations are already there. So for those that have access to Miro, you guys can go ahead and follow along, and you guys can definitely use this as a resource for after the class today. Okay?
Chris, I have a question.
Yes, please.
All right, so this closure that we're looking on the candles, the one that closes at 5 p.m., right? And then it opens back up at 6 o'clock, the same day. But when we're looking to trade, what time frame? Can we use this for the first session, the second session, the New York session?
Phenomenal question. Phenomenal question. So like, for example, if I go now to like the market just opened up right now.
Yes.
Right now, what is the bias right now? Are we bullish or are we bearish?
We're looking bullish.
Bullish, right? We just closed above right here. There's lower high. That's a market structure shift, right? This right here is also a change in state of delivery right there. On top of that, we just inverted this bearish fair value gap that was all here. So price is definitely going up higher, right? This right now, I'm using, if I'm looking to trade the Asian session, what am I using? I'm using these targets, previous day low, and I'm using my previous day high, right? Now, once I get into the morning time, which will be the New York session, you're going to have more data. So aside from the previous day high and the previous day low, can someone tell me what else are we going to have? We're going to have session high and session low. So we're going to see Asian session high, right? And we're also going to see London session high and London session low, which these are what? These are what? What are these levels? Can someone tell me?
Liquidity.
Liquidity. Liquidity points. Right? So if we see that later on today, price goes ahead and we're already closing above here, right? I usually do not trade the Asian session. I'm going to wait till the morning to understand what type of data, what type of price action did the Asian and London session engineer. Now that's going to give me the opportunity to now go down to the 15-minute time frame. And this is why I highly, highly recommend you guys to use the reserves indicator. We gave this out for free, right? Because we really want you guys to understand where these levels are at. And what do we see? This is the Asian session high, and this is the Asian session low. What's the first thing that the London session does? The London session goes ahead and displaces the Asian session low. And what does it do? It comes back up here, right? It took the lows of the Asian session low, right? And how come price came up here and then we came back down? Well, it came back here because we got a fair value gap right here. And that's the reason why price rejected and then came back down. And then what did we do earlier today for those that are in VIP? We instantly knew that price was going to come down. How come? It's pretty easy. This is a failure swing right here. That's a failure swing. That's why at 9:31, I already called out NQ sell because we knew that for a fact we were definitely going to come down, right? So I used the previous day high, the previous day low, and I'm also using the session high and the session low to give me not just my liquidity points, but to also frame a bias. But I'm using, and I definitely got to put this here, the previous day high and the previous day low as my foundation. This is my foundation. I want this to give me the indication of where price is going. And if we break above the previous day high, we are bullish. If we fail to break the previous day high, then we are essentially not bearish, but price will more than likely target the previous day low. Any questions or comments? And a really good point here by Smurf. Most of the time, price will take out the previous day lower high in the New York session. If a previous session ran it, it usually runs it again in New York. This is why I always say, honestly, someone can just trade, which is previous day high and previous day low, and just wait for price to hit it. Honestly, it's really that simple. That's why I don't really want you guys to complicate daily bias. It's really, really simple. Let's go ahead. Just quick example real quick, because I really want to show you guys an example of where price failed to displace the previous day high. 1 second. Let's see here. Let's see. For example, this is a good one right here, right? On this day, the previous day, we failed to displace this day, right here. This was on June 20th. And we can see that what? We can see that we failed to displace. What did price do? Price went ahead and took out the previous day low, right? And then what? We started taking out more liquidity and more liquidity and more liquidity and more liquidity, right? This can definitely work for like swing trading. And to be honest, anyone that knows how to trade ICT, this move right here, this shouldn't be a surprise. Like as soon as you saw price invert here, that's an easy swing for QQQ or whatever you want to, NAS 100. If you want to do Forex on MT4, you could do that as well. So this can definitely work 1000% for swing trading. Drop a one if we're good to go so far with the top model. I also want to go down and focus on the second model, which is going to cover a lot more things. So here we go, right? So a close below previous day low means what? It's just a continuation. So in other words, this is the previous day low right here, right? As we can see, price closed below it. The body of the candle closed below it. So what is that insinuating? There's going to be a continuation. Price wants to continue heading lower, meaning that this candle's low more than likely will be the draw on liquidity for the next day, right? On this example here, we have a red candle, a bearish candle. This is the low right here. And actually, let me quickly get my tool. 1 second. Right here. Right? This is a red candle. This is the previous day low. And what do we see? Price does what? Price fails to displace it, meaning we are not closing below that previous day low, which means what? Price does not want to go lower. Price more than oftentimes is probably going to come back up higher and go to some sort of imbalance, right? That's why these liquidity points are so critical. And that's why that next candle is very important, because it lets you know the direction of where price wants to go. So again, if we fail to close below the previous day low, the next day bias is going to be that candle's previous day high.
Hey, Chris, I can ask you a question.
Yes, of course.
On that, the next day bias for the PDL. What if that's an inverted hammer? Would that be the same thing as a body close?
Right here?
No, the one on bottom left, the left hand. See how you got a body close there? What if that was an inverted hammer? Would that be the same thing?
If that was like something like this, where we're like that, yeah, it'll be the same thing. As long as we're closing below that previous day low, it just means that we're just continuing down. Does that help?
Yeah, that's good. You cleared it.
Okay, excellent, perfect. All right, next. Let's say, for example, we have an inside day candle, right? So a close inside the previous day high and the previous day low. How come we always used to say inside candles are so powerful? Why? Because an inside candle basically indicates consolidation, right? Within the range of the previous candle. So this is our high, this is our low. Price did not displace neither the high or the low. So what do you follow? And most people never talk about this. What do you follow on an intraday candle? Which liquidity target is valid? Both are valid, but essentially you are going to follow the previous candle's bias. So in this case, it will be the previous day high, right? So the previous day high more than oftentimes will be the one to be swept, right? Here, where basically price takes both the previous day high and the previous day low, there's no bias. And this is where you have a new dealing range, by the way. A dealing range basically means where you take buy side liquidity, hence the high, sell side liquidity, hence the low, and when you close within the range, this now gives you a new dealing range, which will basically be this high and this low. Drop a one if this all makes sense. Let's go ahead and stop there real quick for any questions before we go into the chart and we cover and we do cover a couple of other examples. Okay, Shah, Tammy, excellent, great job. Any questions, please feel free to just drop it in the chat when it comes to daily bias. But just looking at tomorrow, can someone tell me what is a daily bias for tomorrow? What is a daily bias for tomorrow? Bullish, right? And whenever you start the week, I highly recommend you to go to the monthly time frame. And then I want you to see, okay, based on the monthly time frame, do we have more bullish or bearish arguments? And what can we see? Well, first of all, price went ahead and swept out this liquidity, and we closed above the range. That's already telling us that price wants to continue up higher, right? On top of that, what do we have right here? This is also a bullish order block right here, by the way. This is a bullish order block, and that is also a change in state of delivery as well. And what did price do? Price came all the way down to this order block, and we closed right above it. So based on this monthly time frame, what's the next drawn liquidity? 21,040, right? So far on the monthly time frame, we have a lot more more bullish arguments than what we do bearish. So far on the monthly time frame, we are good to go. And this is how you do that top-down analysis, starting at the higher time frame and then going to the lower time frames. Now, once we go to the weekly time frame, okay, now we're able to understand this is also a order block right here. Price came to that order block, we popped back up, and then on top of that, we can also see that price is closing above these liquidity points. So it closed above this candle here, which that was a week of July 29th. That lets us know that price more than likely will continue going up higher. Aside from that, based on this week's start, price more than likely, if it continues to respect all the bullish PD arrays or all the bullish arguments, price will more than likely leave a bullish fair value gap behind this week. On top of that, can someone tell me, would you consider this the drawn liquidity for this week? Drop a one if you believe so. I'm going to go ahead and quickly zoom in here and make it better so that everybody can see it. Would you think that this right here is the draw on liquidity where price is going to this week? 1,000%. Yeah, that's the next liquidity point. And this area of 20,088. And for those that are in VIP and you're in the futures chat, I told you guys that we were definitely going to go and hit this liquidity this week, early this week. Why? Because it's pretty evident, right? So monthly time frame bullish, weekly time frame bullish, daily time frame we are inverting a fair value gap. That lets us know already that we're definitely going to go up higher. On top of that, we are also closing above this swing point or this liquidity area right here as well. And then all we have left is just this area right here of 20,093. So tomorrow, if we actually get a small pullback, that wouldn't be a good opportunity for you guys to get into some swing trades. You can always get into QQQ calls 2 weeks out, a month out, and you would 1,000% be able to print money. So even on the daily time frame, what else we have here? We have a weekly fair value gap that is also overlapping with a bullish fair value gap on the daily time frame. So we have a higher time frame fair value gap overlapping with a daily fair value gap. And we are also closing above these areas of liquidity. And we also closed above Friday's previous day high. So that means that more than oftentimes we will draw towards the previous day high. So for tomorrow, the daily bias is 1000% bullish. Any questions or comments so far based off of that? Okay. A question that I received or that I keep receiving in my DMs and also in Discord, by the way, for those that are in Discord, please be wary. There's a whole bunch of people trying to impersonate the team. I am not asking people for money or anything like that, so please be wary when it comes to that. But the questions that I am receiving is in regards to Chris. What time frame should I look at if I'm using the 1 minute time frame as my entry? What time frame, what higher time frame should I look at if I'm trading off the 5 minute time frame? And this was a great question that was raised in the previous class. So this is why we have this right here. I really want you guys to understand this right here. This is the time frame alignment when it comes to PD arrays and institutional concepts, right? So for example, myself, I trade off the 1 minute time frame. So I'm leveraging the 15-minute time frame to look for PD arrays. So I'm looking for PD arrays, either an order block, a fair value gap, a swing point. This is all I use, to be honest. Yes, I take into account the daily bias and the higher time frame order blocks and stuff like that. But to be very, very, very honest with everybody, I just typically look at the 15-minute time frame. A 15-minute time frame, 1 minute time frame for execution, right? I do like the 1 hour. In my opinion, the 1 hour is probably one of the most cleanest time frames that give you that higher time frame perspective, but you're still able to execute on the 5 minute time frame. 4 hour, right? You're going to be executing on the 15-minute time frame. And if you use the daily, then the 1 hour time frame is what you're going to be using for your time frame alignment. Drop in the chat, what time frame is your entry? Like, what are you guys, what time frame? Okay, so I see here, GG is 15-minute, 1 hour. Smurf 15-minute. Anyone else? 1 minute with Shah. Shah, are you looking at the 15-minute time frame or a higher time frame? 1 hour is clean, but I like the 15-minute and 1. Yep. 1 to 5 minute. And I'm gonna show you guys quickly. A lot of these people don't share these indicators. I don't know why, because people try to gatekeep. There's nothing to gatekeep when we have a market that we're able to print and juice money out of it every single day. I really want you guys to follow along here. Please go ahead and add this indicator. It's called ICT, HTF, which is higher time frame. And then I want you guys to type in candles. I use the one from Fadi because it's really, really good. So essentially, this is how I trade in the morning, right? So I put my chart on the 1 minute time frame, and I'm going to go ahead and just quickly open it up for today. So I'm going to go to 928. And in the settings, me personally, I hate seeing all these different candles. So what I do is that I only look at the 15-minute time frame. I could care less about the rest. Yes, I'm looking at, other stuff. Like, for example, I'm looking at the 1 hour for other higher time frame perspective. But again, this is my setup. I don't use anything else. And this works every single day, right? So based on this right here, what can we tell? It is 927. Price is breaking below this higher low up here. So that's a market structure shift. And we're also breaking below this swing point or liquidity level, and we are closing below it. If we are closing below it, what is that telling us? This right here. If we're closing below that level right here, which that, by the way, is a protected low. That is a protected low. Why is that the protected low? It is the protected low because that is the level or the area that created this massive move towards the upside, right? So this was the level that created this bullish order flow leg. So what does that mean? If we break and we close below it with a red candle, the market is showing you the hands. Like, don't overcomplicate. It's letting us know that price is going to continue going lower. And then on top of that, we are disrespecting all these bullish PD arrays. For example, we are also disrespecting this bullish fair value gap, this bullish fair value gap, we are disrespecting it, and we just inverted that towards the downside. That's another area of confluence, right? So let's go ahead and quickly look at the 15-minute candle that we have right here. And again, I love this because I don't have to pivot over to the 15-minute time frame, nor do I have to add additional charts. And what can I see so far? I like this indicator because this indicator plots out the fair value gaps for you. So you can be live like this and you can say, you know what? Well, price is closing below what? Anyone? Price is closing below, price is disrespecting
Fair value gap.
a bullish fair value gap. So what is that letting us know? It's giving us the hand. We're going lower. So now on the 1 minute time frame, what's your responsibility? Your responsibility is only to find a good entry. That's it. Done. You know where price is going. Right? And that's the reason why I said sometimes I do use the 1 minute time frame. Sorry, the 1 hour time frame. And what can we see here from the 1 hour time frame? Well, first of all, this right here got swept. This right here is actually a turtle soup. A turtle soup is basically where it's a false breakout and all the retail traders got smoked there because they don't know how to trade and they don't know that the market is built off an algorithm. And most importantly, what happened here? Most importantly, price reverted back into a bearish fair value gap and price is respecting it. That is the reason why I said earlier today, price is going to 19541. I don't care when. I could care less when. I just know for a fact it's going here today. And it did. Right? So that is the way that you guys can see I'll be giving out take profit targets and they hit. Why? Because it's evident. It's just inefficiencies and liquidity points as well. Again, the indicator, and thank you, Mark, for that, is ICT, higher time frames, candles, FODI. I only turn on the 15-minute time frame when I trade because I take entries off the 1 minute time frame, right? So if we look at here, we have all the confluence in the world to let us know that the narrative in the order flow is currently bearish. So 928, okay? What am I using now? What am I using now? Why did I call out at 931 a sell? Well, if the higher time frame that I am aligned to is indicating bearish price action, my job is to go to the 1 minute time frame and find something. What did price do instantly? And by the way, the price will always give you a fair value gap as soon as the market opens. As soon as the market opens on the 1 minute time frame, on the 2 minute time frame, the 3 minute time frame, the 5 minute time frame, the 15-minute time frame, there will be a fair value gap right there, right in your face, that all you got to do is be patient. Right? All you got to do is be patient. So this right there, this right here is a inverted fair value gap. What does that mean? It means that this bullish zone, quote unquote bullish zone, now just turned bearish, meaning that this right here can be used as a way where price can retrace and continue heading up lower, right? And by the way, just any single time that I see fair value gaps like this, I'm instantly getting into a sell because it's letting me know that price is still respecting. Blake, what up, baby? How you, bro? Price is still respecting that bearish fair value gap. And what do we see? Call that out, 931, 2 contracts, you would have been up a good amount, and price is still respecting it. Still respecting. And this right here would have been a great day. And it does come back to 1941. Price is still respecting that bearish fair value gap. We still did not close below it. Again, it's just patience, right? But all I'm using is the 15-minute time frame, higher time frame, to take my entry on the 1 minute time frame. Any questions or comments?
Chris, I got something.
Yes. Oh, please, go ahead, bro. And if you want to share your screen, please let me know, bro.
Oh, now I'm outside, but listen, I want to while you got it on the screen, you see how that candle came back to that inversion?
Let's see.
Right there, you see that wick?
Yeah.
Oh,
yeah.
That one. What that's doing is balancing that range. Once that price comes back and does that, it's probably not going higher.
Right.
But if I was in a trade and I seen or not trade, but if I was watching it, I'm not going short until I see that. I'm not going short until I see that inversion tapped again. Now, a lot of times it's heavy and it don't go back. But when you see that, right, it's gonna be a brick wall. It's not happening, and like you might as well just start looking for lower targets. But you got to be patient and let them bring it back to that inversion. The inversions to me is more powerful than the regular fair value gaps.
Agreed. Yeah.
All right.
Yeah. No, and that's a really good point. And that's a gem. I'm telling you guys, this is a gem. And just to further clarify what Smurf just dropped, we had a bullish fair value gap here. And this can be so a balance, a BPR, a balanced price range is whenever you have, for example, let's say, for example, we have a bearish fair value gap, right? Let me go ahead and draw it. So first I'll cover the BPR question first, and then I'll go back to the example, right? So let's say we have a bearish fair value gap here, right? Boom, right? And then all of a sudden, price starts to create, right? A bullish fair value gap. And this bullish fair value gap, it doesn't have to perfectly overlap, but it overlaps with the bearish fair value gap. That now becomes a zone. It's all zones. Like, honestly, do not complicate this stuff. It's just zones. It's just, it's the same thing. It's just different types of jargon, right? So this right here is a bearish fair value gap. Drop a one if everybody got that, right? Just drop a one real quick. I want to see that everybody's engaged and we definitely locked in, right? Bearish fair value gap, and then price comes ahead and does what? A sharp turn. This fair value gap overlaps with the bullish fair value gap, which means what? Price can always do what? Price can always do what? Come back down and give you what? An entry to go up higher. So basically this becomes a bullish zone or a supply zone, if you will, where price can always come back and revert to it and then continue going up higher. So that right there's called a balanced price range, a BPR. That's another concept. And I really hope you guys can see it's so many concepts you can use. And I don't want you guys to get so stuck up on like, damn, I didn't catch that breaker block. Damn, I didn't catch that fair value gap. Damn, I didn't catch that invert. Focus on one model. Focus on trading just fair value gaps. Focus on just trading inversion fair value gaps. Focus on just trading, turtle soups and false breakouts. And trust me, it's everywhere. And like Smurf just said, if you backtest these models, you guys will be really, really amazed, and you guys would really see that every day you can come in and trade, and you can get at least 50 to 100 points every single day. 50 to 100 points on one contract, you're making $300 to $700 every single day. And that's just one contract. So imagine once you start adding size, like 4 contracts, 5 contracts, you're making thousands every single day, and you treat the market like if it was your ATM. Okay, so we got BPR down. Let's go back to the Smurf example because I really, really want you guys to understand this. So you see how this became a zone with the BPR? It's the same thing here when it comes to the inverted fair value gap, right? This was a bullish fair value gap. Price comes and we close below the first candle, right? Now this becomes a zone. Now this becomes a bearish zone that price can always do what? Price can come down and come right to it. You saw how we put this crazy wick right at the inversion fair value gap. This is where a lot of professional traders are getting in right here, right? And they will sell one more time. And what are they targeting? This is easy money right here. Look, and you making what? Almost 3K? Well, 2,400 almost off that. Yep, right there. Boom. Look at that. And we're disrespecting what? Every bullish PD array is getting disrespected. Everything, look, disrespected. Boom. That's easy money. Right? So this is how I really want you guys to be able to trade and use these different concepts. And again, please go ahead and backtest this stuff because this definitely works. Questions, comments, concerns. So far, we've covered daily bias. We've covered the balanced price range. We covered a great example there by Smurf on the inversion fair value gaps. And then we've covered how we're able to use time frame alignment. This is how I want you guys to trade. Forget about the whole taking in 3,000 time frames and trying to catch everything. Nope. If you like the 1 minute, I love the 1 minute. I will never go back to anything above the 1 minute. Matter of fact, I'll probably go to the 30-second time frame now. For real. And I might do 30-second time frame with a 5-minute higher time frame on everything I love. Like, look, it'll look like this. Let's go ahead and go to it. So let's go to, yeah, Vincent, you definitely know the progress. So let's see. Let's go to the reserves. One second. And I would use something like this, where I would use the 5-minute time frame. By Christmas, I'm dead. Let's see. Boom. Let's go here. Let's go here, right? And this is how we use it, right? So go to 929 and look, 5-minute time frame. 5-minute time frame is my higher time frame. I can clearly see that price is already disrespecting these different fair value gaps. We already inverted, right? So that you can use it just like that, and wait for a 1-minute entry, something to give you an entry. And that would have been your entry right there, right at 931. What are you doing here? You're waiting to see, is this candle going to invert? And this is where you got to be patient. Just practice your patience, right? Is this candle going to invert, or are we going to continue going down lower? Next candle, that already gives you it. I mean, that already gives you something. It already lets you know that we're actually respecting that. And that would have been some cash in just a couple of minutes, $300 in a couple of minutes. Or if you would have held in longer, you definitely would have made a lot more money, right? So this is how you're able to trade, and how you're able to align yourself with your preferred entry time frame, and then on top of that, your higher time frame PDRA. Let me get some ones, some fires, something, if you guys think so far it's helpful. Next, we're going to cover another concept, which is going to focus on order flow analysis. And this is going to be really, really critical. Shout out to Arjo on YouTube. He does a great job when it comes to these graphics. Shout out to his whole graphic design team. They do a really good job at this. So what is this, right? I think, in my opinion, that when you get into a trade, if you don't know what's your first line of defense, you should not get into the trade, right? If you do not know what's your last line of defense, you shouldn't get into the trade. And what do I mean by that? What I mean by that is that when you get into a trade, when you look at price action, let's say, for example, we're making higher highs and higher lows, right? Higher highs, higher lows, higher highs. And let's say we're right here, right? This is a order flow leg. And what can we see from this order flow leg? Well, we have these higher lows that at the end of the day, these are liquidity points, right? Right? We have this higher low here. We have this higher high right here. These are just liquidity points at the end of the day. Within these higher highs and higher lows, what are you going to have? Well, you're going to have concepts and arguments that we talk about every single week, which is what? Well, right here, you may have what? A fair value gap. Right here, you may have an order block. Oh, right here, you may have another fair value gap. Or right here, you may have another fair value gap. Okay? So let's say we're right here at this level of 19,635. And let's say we went for a buy right here. My question to you, what's your first line of defense? And what do I mean by first line of defense? What I mean is, what is the first area where we can potentially have a reaction from? Right? So for example, this right here, this is a bullish order flow. So what is the first line of defense? The fair value gap. Why? Because we are betting that if price comes down to the fair value gap, we would like for the price to do what? Bounce and continue back up higher. So when you get into a trade, you got to think about, what is my first line of defense? What is the one thing, the one activity that if that happens, that invalidates my trade? You have to know that. If you do not know that when you get into a trade, you're guessing. And you have no thesis, you have no evidence, you have no arguments. You're throwing a dart and you're praying that hopefully it goes up. But when you understand, well, if we got into a buy right here, my first line of defense is going to be this fair value gap. This is the first area that I am betting that if price comes in here, it can do two things. We can either bounce back up and create what? A breakup structure right here, which breakup structure just basically means a continuation that price is going to go up higher, or price can break below. And if we break below, now we got to think about, okay, what's my next line of defense? Okay, maybe is this level right here, this higher low, this swing point. Well, if we go ahead and we start breaking below it and we get a candle, like for example, let's say this one, and we start breaking below that liquidity point, that basically tells me price wants to go lower. My idea, my thesis that NASDAQ was going to go up higher is no longer valid. So that's why sometimes when the trade doesn't go our way, I always say first line of defense is fair value gap. And I have there's no negotiations, there's no bargaining. If we break that, I'm out. I don't care. I don't care where price goes to. Price can go to Alaska. I could care less. I'm protecting my capital. And that's what I really want you guys to understand. You guys are portfolio managers. I really want you guys to act and behave like professional traders, right? Forget about who's posting 6 figures a day and $1 million a day. That's their path. You have your own individual path. Go for yours. And I can guarantee you that if you do that, you'll definitely win eventually. So that's what I mean by first line of defense. So let's take a look at this right here. All right. Let me go ahead and just X out real quick. And let's go back here. Let's go back to this bar. Let's go back here. And let's say, for example, we are in a sell. For whatever reason, we got into a sell here, right? What's the first line of defense? Can someone tell me? Looking at this right here, what's the first line of defense? I'm going to make it a bit bigger so that we can all see it. And we're going for a sell. We're going in for a short. What is your first line of defense? That basically you say if price closes above it, up the fair value gap. Right? And as soon as we do that, what happens? Right? Boom. Did price close above it? Let's wait. We did not close above it. We have not inverted that, which means what? Price is still respecting our first line of defense, which means what? Our trade is still intact. Boom. And that's why we came back down. Right? Aside from this first line of defense, what's your next line of defense? Can someone tell me? Is it this 930 candle? Is it the high of this 930 candle? Drop a 1 if you believe so. 1000%. First line of defense, fair value gap. Second line of the first or last line of defense will be this liquidity level, which means what? If we break above, that means that price is going to continue going up higher and our thesis is no longer valid. And what happens? Look at that, 430, 580. I mean, I hope you're taking profit here, right? Price goes lower, 710, 710, right? So our trade is intact. But what I really want you guys to understand is that every order flow has a leg. It's for you to dissect that leg and understand what are the areas that are of defense and where you expect price to react from. Questions, comments? It is 6:50. Any questions or comments when it comes to anything that we've covered so far, especially here when it comes to the first line of defense? You can also do an overlapping. I don't really use the overlapping defense, to be honest. I just use 2, which is the first line of defense, and then what's my last line of defense? Basically, what's my last resort? That if we break below it or break above it, I'm out, and I could care less where price goes to, but I'm protecting my capital. But I am protecting my capital with valid arguments, not with stupidity, not that I'm guessing, not that Powell, I could care less what Powell doing. He's a puppet. I care about what the chart is telling me and what are the concepts that are institutional based that are letting me know that my trade is now invalid. So like, for example, if we continue playing it, boom, boom, right, boom, right, 1310, 1810, I'll take that any day. 19, what? I'm taking that all day. You gave that to me. I'll take that. right? But let's say for whatever reason, price continues to go up higher. What do we see down here? A couple different things. We just inverted all these fair value gaps. That's why that buy at 940, 950, by the way, that was straight up money, right? And let's say, for example, we would have bought right here. Okay, let's see what happens. You see how price just closed above this liquidity point right here? That's an indication that price is going to go up higher. Also, we have what? We have order block, and we also got an overlapping fair value gap. Whenever you have an order block overlapping with a fair value gap, that is a high probable trade all day, all day. Trust me, right? 520. Let's continue. Price is what? Price is is not really closing above this liquidity point, which was actually our last line of defense, but price comes down to a fair value gap. So on this buy, what's my first line of defense? Is bullish fair value gap right here. And what happens? Price does not close below it. Here it does close below it. It forms a fair value gap. That's where I now start to make a decision. And you see that price comes lower, and then finally, eventually, it does try to close above it, and it goes above, right? But that's how I want you guys to approach every single trade, is with the first line of defense and the last line of defense concept, and that will help you understand when is the right time for you to exit and when is the right time for you to even double down. Yep, and it came back down to the inversion fair value gap to go up higher, 1,000%. Questions, comments, remarks, concerns? It is you versus you. Never forget that.
Chris, I have a question.
Yes.
The macro time. I remember in one of your earlier classes, you spoke about that. Is that a time from the 950 to 1010-ish that we should not be trading, or like what's happening again during that time?
Great question. And please drop some ones for that fire question. Don't get me started. I'm telling you, don't get me started. I love this stuff. So macro times is actually, I wanted to do that for the next class, but let's go ahead and cover it just briefly. High level. You guys do understand we're going against an algorithm, right? And I always say, you got to please build a model, please build something that's consistency, right? You want consistency when it comes to your trading. So for those that want the macro times, let me first explain why the macro times are so important. So first of all, the market is ran by this algorithm called the IPDA, right? So it's the interbank delivery algorithm. This is the bank that was created by market makers to take out liquidity every single day, right? And to seek liquidity and fake people out every single day. We honestly have an algorithm, a system that was created to make us lose money. But those that understand the institutional concepts, like us, we will actually make money. Now, throughout this algorithm runs all day, but they are called macro times. These are specific times or periods within the market where price, not all the time, but most times, price is either going to rebalance or engineer liquidity or go after liquidity, okay? Price is either going to rebalance or price is going to go ahead and engineer liquidity. Why is that so important? Because now that gives us time and price. And if we're able to combine price action concepts with dedicated specific times, we won. Why did we win? Because now we have dedicated time periods where we can say, you know what? 950 to 1010 is a macro time. And this is actually taught by Michael from ICT. He says the last 10 minutes of the hour and the first 10 minutes of the hour, that 20-minute time period, is a macro time. So 950 will be your New York session macro time. 1050. And if you guys backtest this, you guys will see the wonders that this does. 1050 to 1110, that's also a macro time. Drop a one if you guys want a really good indicator that I've been testing out. By the way, not all the indicators on TradingView are really good, but I'll show you guys one that I've used in the past and I've thoroughly tested it out and it does work. Smurf, please, brother. Please, bro.
All right. Yeah. So with the macro times, and that's pretty much only time I'm looking for a trade is macro time. So in between the macro times, you get equal highs and equal lows produced, right? And then if you're a 15-minute time frame trader like me and Chris, you're gonna get a 15-minute order block most of the time during the macros. So if you see the price just going down, spooling down, it's probably retracing into a order block. If you look on a 5-minute time frame, there's going to be a fair value gap inside that order block, and there's going to be equal highs. So if it's bearish, the equal highs is going to be below that fair value gap on the 5-minute time frame. If you're looking at the 15-minute time frame, once it runs up and goes into that fair value gap, the equal lows that was created is going to go get those next. So that's where I would like I was short. If it's a bearish fair value gap inside a macro, I'm waiting for it to come back into the order block that has the 5-minute fair value gap. If it has a 5-minute fair value gap and equal highs below it in a premium, yeah, go ahead and take that trade because it's going to the other side. But you gotta back test it to spot it. It's there every single day, all day.
Yeah, this works. No, this works, and that's really good insight. And if you guys look here, go to macro times. I use a couple of one. Luxalgo has one. I've used that in the past. It works well. It's clean. I'm not gonna lie to you, it's clean. I can't find it now. Let me see. Luxalgo. I'm trying to find this. I got it. Put it like this. ICT macro. There we go. So ICT macros, right? Luxalgo, and you're gonna see what it does, right? So if we go into the indicator, you can actually select the ones that you want, right? Here's the 950 to 1010, 850 to 910, 1050 to 1110, 1150 to 1210. These are really, really good, right? And if we go here, let's go, for example, let's go here. And let's go to like the 1-minute time frame. It goes ahead and shows you and shades out that time of the 950 to 1010. 950 to 1010, I know, and Smurf does it every day. There are folks that only trade during these times. So you could be a trader that you can say, you know what, I only trade NASDAQ, but I only trade the 950, 1010 macro. What does that mean? It means that every day you're coming into the market, you're not taking any trades here. Like, by the way, this right here, taking trades here, it's really risky. Why? Because there's no draw on liquidity yet. There's no draw on liquidity yet. The London high, London low haven't been taken out. Previous day high and previous day low were not taken out. Asian lows were taken out, but Asian highs were still up there, right? So draw on liquidity is really critical. But again, you can be a trader that you can use one simple model. Using the price action concepts that we know about, the PD arrays, you can also use time where you can say, well, I'm going to look for trades here, right? Where more than oftentimes it's going to give you a profitable trade. So let's go ahead and continue. Price does that, boom. Price does here. And you can even use the 950 to 1010 highs and low as what? Liquidity targets. You can use it as liquidity targets. And Blake, come on, bro. Hop off mute, bro. Don't play with me, bro. Hop off mute. Cause you do this every day. Please
Yeah,
hop
man.
off. Yeah.
Yeah, can you hear me?
Yes, bro.
Yeah, man. I mean, just to kind of like co-sign everything. I mean, the macro times. I mean, knowing those windows, a lot of times price will start to go against you right before that 950 macro, right? So it'll be like 940, 930, something like that. And knowing that price is gonna, pretty much run back to a certain liquidity level at those times. I mean, from an emotional standpoint, it really stops you from doing something stupid like pulling the plug on your trade early, or just even being in the position to really take advantage of that. So I mean, me personally, like that 950 macro time, I'm usually waiting for a break of structure. I'm usually waiting for the market to flow back to a certain liquidity level, whether it be an old fair value gap or order block or something like that. And I mean, that kills every single time. That's that momentum right there from that 950 to 1010. Most of the time, it's going to take you straight into the lunch hour. So I mean, it's definitely powerful.
Yeah. Yeah. And if you can, for whatever reason, use a 950, well, you can use the 1050, right? And there's also 20-minute. And by the way, look how easy this is. Like, not, I wouldn't say easy, but I'll say look how flexible things are, right? So even after the 950 to 1010 candle, right, or time frame, we can take into account a couple of different things. Well, this was a low. We broke below it. That's already letting us know that price is going lower. This right here is also changing state of delivery right here. That's letting us know that the order flow is also shifting lower. We just also inverted this bearish fair value gap. Sorry, bullish fair value gap is here as well. So now this becomes a inversion fair value gap. And then on top of that, what do we do? Now we're closing below all these up candles, all these green candles. That's also a change in state of delivery. And we also displaced that low between the 950 to 1010. That's giving you, I mean, it's giving you all the hands. This is a quick scalp. Do not underestimate these small moves. Like, do not underestimate a quick 10-20 handle point. I mean, that's still money. Like, it's still money, right? So even if you got into a sell there, which I wouldn't recommend that, but you still would have been up. Yes, some drawdown and then boom, 790. Hold that. Yeah, where we going? Please tell me where we going. You know, so this is how you guys are able to use these different things. Also, if we just X out here, I just want to continue playing it so you guys can see how the 1050 goes ahead and automatically maps out. And this right here, this happens all the time. Look how right here, that's an easy buy. That's an easy buy opportunity. We just inverted that bearish fair value gap. We're leaving behind a bullish fair value gap. So if you didn't get in here, you know, and price came down, this would have been another entry as well. This is also an order block as well. And what does price do? Price is going to push up. Boom, boom, 720. 2 trades right there. Easy money, minimal stuff, minimal analysis, right? And if we continue, let's go ahead and we take that. We up 1780 for the day using 2 contracts. Price comes down. Go like that, boom. And then I think the 1050 macro is going to start here soon. And I really want you guys to see how this looks like live so that once you see it live, you're not surprised by the indicator, right? So we're consolidating a bit. The bullish fair value gap is holding up price. And then what happens? 950 starts. Boom. And then what does 950 do? What does 950 do? Well, we're also closing above here. That's letting us know that price wants to continue up higher. Boom. 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 Just, that's all you need right here. You don't need an order flow from here to Tennessee. And I'm in New York right now. You don't need that. You know what I'm saying? You just need just 50 points, 100 points, and you're good money every single day, right? But just showing you guys how this actually looks like when it comes to order flow. Macro times, we're going to go into a bit more depth. That's going to be the topic for the next class. Just wanted to give you guys a high-level explanation of what that is. Shout out to Smurf and also Blake for the great insight. This thing is helpful. They trade every day. They're funded, millions of dollars that they're funded in. And you got to think about it like this. If Apex, My Futures Trading, Top Step, they're doing all these different things. They're all you got to do is show them that you could do this. You telling me you're going to leave all that money on the table? When I've seen people get payouts of 40K, 30K, 20K, 10K, 15K. This is possible. This is possible. It's all about your dedication and how bad you want it. I'll be on the charts all day. Honestly, it's addictive at this point. But I want it bad. I want it really, really bad. And I really want you guys to want it bad as well for you and your family. Because this, you can feed a lot of people with this and you could pass this down and nobody could take them from it. So listen, somebody could rob you for your Rolex tomorrow. Somebody could rob you for your phone tomorrow, but nobody could take the knowledge and experience that you obtain every single day. Nobody could do that. That's why wisdom and experience is wealth. Fuck the money. The money's fiat currency that's printed every single day. And people don't understand that. Wisdom, you can't buy that. You got to go through it. You know what I'm saying? So really want to say thank you to everybody. What a great class. Shout out to everybody for putting in that work. Keep applying that pressure. It's you versus you. Make sure you win. Thank you all. I'll see you guys in the free chat. Please give us feedback on this class. And next week, we definitely put in the back with the macro times. Thank you all. Appreciate it. Take care.